Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. The solar industry got some guidance on what additional tax credits would look like for US domestically produced content. This is a kicker on top of the 30% investment tax credit and could help make solar more economical. One of the interesting impacts in trading on Friday is that First Solar jumped about 26%. So that was the big winner, but I don't actually think that's going to be the stock that's going to get the most benefit from these tax credits and from this rule. So I want to dig into exactly what the announcement was, what we know so far, and then how to think about this industry going forward. My name is Travis William. Thanks for watching Rive Investing. Please subscribe here on YouTube for all my content. And I want to start with an explanation of exactly what was announced. This is an article from PV Magazine. So this is one of the better places to look for information on the solar industry. And you can see here that eligible projects will get an additional 10% on the investment tax credit to total 40%. This kicker for the production tax credit, that typically applies to wind projects. So for the solar industry specifically, this is going to be an increase from 30% to 40%. The way that the investment tax credit works is that you get a credit for a percentage of the cost of an installation. So if you put an installation on your roof, it costs $10,000. You can take a tax credit for $3,000. What this will do is increase that to $4,000 if you use specific domestically produced content. It goes on to talk about what qualifies for that. And there's a lot of rules in there. And I think that we're going to learn more over the next few months and quarters about exactly what the rules are and how they're going to be implemented. But they can be things like steel, manufactured products. So that would be something like solar panels. This is one of the reasons that First Solar was one of the beneficiaries today. Is the place that the market goes, I think, initially is, well, First Solar is the biggest solar panel manufacturer in the US. Obviously, they're going to be a big beneficiary. And that might be true. But keep in mind that that is not the only part of a solar installation. There's racking, there's wiring, there's labor, there's all kinds of things go into that. Labor is probably not going to be included, but it was clear that a solar panel doesn't need to be entirely produced in the US to qualify the project for this additional credit. They can include wafers or cells that are made in places like China and still get this benefit. Here's the other part that I think is important. In addition to meeting domestic manufacturing requirements to be eligible for the bonus credit, projects must meet one of the following. Has to be basically a small project, so under 1 megawatt, not a utility scale project, but something that would go on someone's roof or even a small business's roof. Construction on the project had to begin before January 29th of 2023, so anything that's starting right now would not be eligible. Or it has to satisfy the Inflation Reduction prevailing wage and apprenticeships requirement. So that would be something that is going to apply more to bigger projects. The reason that I think that this is interesting from First Solar's impact today in trading is that the only thing that First Solar would really have any benefit from is this part right here, is that if projects are built with prevailing wages and apprenticeship requirements. Because First Solar doesn't sell solar panels into these small installations that are going on people's roofs or on businesses' roofs. They're almost entirely a utility scale solar business. I wanted to highlight that the Solar Energy Industries Association did cheer this rule, basically because it's going to make it more economical to build more solar. There's always this battle between whether you're benefiting a solar panel manufacturer or the actual end installer. Right now, it seems like this will benefit mostly installers and not necessarily any specific solar panel or component manufacturer. And so that's the balance that they're trying to strike in basically cheering this rule without saying exactly who the winners and losers were going to be. What I think was striking from the market's reaction is that most of the installer companies didn't really respond. So SunPower, Sunrun, Sunnova Energy, these are the kind of companies that are going to actually be getting the tax credit or selling it to consumers. So they're really the intermediary here that are going to be seeing the benefit. It's much more questionable how much of that benefit is going to go to any of the component suppliers, whether you're talking about a component like an inverter or a power optimizer like Enphase or SolarEdge, or a solar panel manufacturer like First Solar, or any of a dozen solar panel manufacturers that may be supplying panels to the industry. For them to benefit, you're going to have to see the installers actually be paying a higher price. And I don't know that that's going to be the case. A lot of these companies are already starting to move some manufacturing to the US, especially from an assembly perspective. If we aren't in a situation where all of the components need to come from the US and some components can come from China, and this can be just the place where modules are assembled, I think that won't be nearly as beneficial to panel manufacturers. What's strange about this is that I think it's pretty clear that the benefit of this ruling and this tax credit is going to be to installers, but they have not responded at all from a market perspective. So that's something I'm going to be watching over the next couple of quarters. I want to hear from a lot of these companies what things are like on the ground. Are they seeing more demand? Are they having to give a little bit on price? Because they should get some benefit from a cost perspective, especially as they sell their tax credits. That's what they oftentimes do, especially on leases, is you sell that tax credit to a profitable company like a tech company or a bank. So they're going to have more assets to sell to them. That's going to be a benefit for financing these projects long term. Now, I will note that First Solar has said in the past that they've had some kickers in some of their contracts, that if something like this passes and there's a benefit to the project installer that wasn't in that contract, that they're going to get a piece of that. So again, First Solar may have a short-term benefit that we don't quite know exactly what the direct impact is yet, but it will be there over the next few quarters. So keep an eye on that. But the other thing to keep in mind is that they're sold out through 2025 and into 2026. If there's a benefit for demand and pricing in the US, First Solar probably isn't going to see a lot of that because other companies are going to be increasing their production here before First Solar is able to do that. They've already started expanding, and I don't think that they can bring plants online all that quickly. So a lot of the benefit for them may already be baked in. But this is going to be something to watch. This is only a handful of hours old at this point as I'm recording. So we're going to have to see what the impact on all these companies are, what the impact on pricing of a lot of these components is. And the next few quarters are going to be really telling. So check back here for more information on what's going on in the solar industry. Let me know what you thought of this ruling, about the market's reaction, because I think it was really interesting. I actually think installers look a lot better today than they did just yesterday, but we'll see how that plays out. Don't forget to follow Rive Investing. Thanks for watching, everybody. I'll see you here next time.